Yes, we have seen a sequential improvement over the second quarter after the trough in April. At the same time, we want to be cautious by looking too much into the exit rate coming out of June. We expect the second half of the year to remain very volatile. It's really a tale of two stories. We see a lot of strength in the off-trade with double-digit increases in Europe and beyond. We are growing share in the off-trade amongst that growth. But then, of course, our on-trade business, which represents around 35–40% of our global business, is highly impacted by the crisis. And in all transparency, we expect the on-trade not to come back to pre-COVID level until there's kind of a more structural solution like a vaccine. Until that moment, it will be really two steps forward, one step backward, as we are seeing currently in June, July, August. In June, the business really coming back. But in July, we've seen new lockdowns in South Africa. We've seen new constraints in some of the states in Mexico, which is an important market to us.
What I read as I look through the statement in the round is a level of opaqueness about the outlook here. And you talk about not making any structural shifts in numbers of workers employed here. You talk about holding off current further supply chain capex until you get a little bit more visibility, it seems to me. At what point do you think your hand is going to be tipped, that you will have to start thinking about perhaps taking the scalpel to the business and reducing headcount and adjusting the structure of the business to the new reality?
Yes, it's true. We have made a firm commitment to our employees globally that there won't be any restructurings due to COVID until the end of this year. And we will fully stay true to that promise. At the same time, we are making big interventions in the business. We have taken out about $500 million of cost, mostly in the second quarter. We are really taking a tough look at our capital expenditure. And it will be really a matter of both taking care of the health of our business to protect our business while minimizing the impact on our people globally.
And in terms of production then going forward, to what extent does volume remain challenged by current operating arrangements, or have you found that you've been able to get back to business on the production side relatively unscathed?
Now, on the production side, I can't tell you how proud I am of our people and our supply chain. We have been very agile and adaptable in both ramping down going into the crisis and ramping up very fast coming out of the crisis in many markets. As said, looking forward, it will be volatile, but we do see a lot of growth in the off-trade, so we will be really leaning into that. We see very good growth on our premium portfolio. The Heineken brand, our flagship brand, doing particularly well. It has been much publicized that brands that command high trust are doing well. Heineken happens to be the most trusted international beer brand. We saw just low single-digit decline. And if you would isolate for the important South African market, the brand would have grown. We were up in double digits with brand Heineken in about 14 markets globally. 0.0 beer doing very well. Heineken 0.0 up in all our regions. Other premium brands like the Tiger brand doing well. So we will be really leaning into the parts of our portfolio and our channels where we see continued momentum. Also e-commerce, a lot of industries have commented on it. We see it in the beer category as well. We, over the last years, we have built a pan-European business-to-consumer platform called Beerwolf. Revenue almost doubled in the first 6 months of the year. We have now over 3 million consumers ordering there. So it will be volatile, but we do see good momentum on parts of our portfolio led by brand Heineken.